Hey guys, what's going on? It's your big dreamer and doer G Dinero coming to you today with another TA Tuesday. This time it's Tuesday, January 6th, 2026. This is the first one of 2026, guys. And we have things like Bitcoin, Solana, Tesla, MicroStrategy starting to make their way up right now. Is this the start of a little bit of a rally? We'll see. But first, none of this is tax, legal, financial, investment advice. It's your buddy G Dinero helping you increase your financial literacy to help put you and your family on that path to financial freedom. And before we get too far along, I just want to say special thank you to Bull Bear Saul, who said, just another Money Monday, the best way to start your week. Jet Dog Superstar, who said, thank you for showing what can be possible. I would urge people to become a part of the community because you can see for yourself that members are actually doing this week in, week out, and everyone is teaching and supporting each other, and that includes absolute beginners. What he's referring to is people are making $3,000, $5,000, $10,000, $11,000, $12,000, even $15,000 in a month, following a few simple steps, and they're learning it over in the G Dinero coaching community. So thank you, Jet Dog Superstar. Joe Biden's daycare, JBDC, as I call him, said another banger. I love the forward thinking and providing some insight into what you can achieve through investing. This is well thought out analysis and planning. As always, thanks for all you do, Sensei. Thank you, JBDC, for everything you do, man. You become a great friend of mine. Really, really appreciate you. And Jesus the way and the truth. Isn't that the truth? Amen. Loving this community and the teaching. Jesus, the way and the truth, loving you for putting that out there. Thank you so much. So great to get this kind of feedback from folks like Bull Bear Saul, Jet Dog Superstar, Joe Biden's daycare, and Jesus, the way and the truth. Guys, let's jump in and see what the charts are telling us. All right, those of you that have been following me long enough know the drill. We're going to start out with the Bitcoin TABI model, and the TABI model remains yellow. Even with the little bit of pump that we're seeing right now in Bitcoin, the TABI model remains yellow. Now, I'm going to draw out some key support and resistance areas, right? Right now, we are just below that $95,000 line in the sand. Where do these terms come from? Short-term holder cost basis, true market mean, and the realized price. Those come from James Check over there at Check on Chain. So check him out, pun intended, if you haven't already. He's got some great charts. And I know that Alec that works for him is in the midst of redoing a lot of the charts right now too, to make them even more user-friendly. So that's James Check over there at Check on Chain. Become a good buddy. As you're looking through here, though, what you'll notice is the short-term holder cost basis has dropped down to $98,795. You can see that right here. Then you have the $95,000 line in the sand. So guys, that is the resistance right now. When we get anywhere near that short-term holder cost basis, folks that have been underwater for a while now, they will likely exit in order to get their money back, right? If they bought over the last few months and they bought up there at 126, or they bought at 120 or 115 or 110 or 105, by the time we get back up to close to 100, they're going to exit and be like, oh, thank goodness I only lost a little bit of money, right? So expect some resistance there at the short-term holder cost basis, as well as that $95,000 line in the sand. Support the true mean. That's the true like average price of all coins on chain that are actually moving, right? It excludes things like the Satoshi coins. It excludes things that those that are presumed to be lost or that have never been moved ever in their history since the first time they were ever mined. If you exclude those, the true market mean is somewhere right around $81,000 right now. That is putting in a floor. Is that the floor? No, the floor could be down as low as the realized price. I personally don't believe we get down that far. I think we get down to maybe 70,000, 60 at worst, but down to 70,000 if we even drop that far. But right now, things are starting to improve. Bitcoin's back up in the the $94,000 range. You see that the Meyer multiple starting to turn up. The MVRVZ score is starting to turn up. Those had shown extreme weakness, like multi-month or year weakness. Now we're starting to turn up. Volatility is still in the toilet, though. There's really no volatility in this. If we come over to the Bitcoin and we start with the monthly. So here we are on the monthly and we take a look. You can see clearly right here that we are, and let's throw on VRVP for this too. You can see clearly right here, we are starting to put in a green candle after 3 red monthly candles in a row. Is that the turn? Are we going to bottom out like we talked about before at around that $80,000 level and start to make our way back up? Or is this just a dead cat bounce, so to speak, and we end up turning up for a little while and then going back down and finding that the bottom at 70? We'll see. It really stands to be determined. The good news is we had turned negative. We had turned down on the trend here back in the 24th, right around Thanksgiving. The trend turned down on the weekly. This is Bitcoin on the weekly right now. It had been in an uptrend all the way since back in 2023. And it turned down for the first time here at the beginning of December of last year. So about 5-6 weeks ago. We're starting to turn back up in the price. That may be enough to turn the trend back positive again. We'll see. We did put in a green mean reversion dot, and we did bottom out with RSI at 35.77 just about 2 months ago right now, roughly 2 months ago. You'll notice MACD is starting to turn up also on the weekly. So those are important factors when it comes to the trend reversal side of things. So that's on the weekly. On the daily, if we come over to the Bitcoin daily, here we are. We are at the very top of this linear regression channel with an 87.8 Pearson coefficient. So that's a pretty tight channel right there. We are batting our head up against this $95,000 line in the sand like we talked about. We have flipped from being mean reverted to the downside to now being mean reverted to the upside with RSI up getting close to 70 on the daily. Let's take a look real quick at the liquidity. And if we back it out, we're coming back up to this line. Let me go ahead and I'm going to extend it to the right. I'm trying to keep it as straight as possible. I would say that's probably pretty straight. May or may not be. But the liquid, I got to come up just a little bit. There we go. All right. There, that looks more straight to me. More straighter. I know. That's not a word. So here we are. We're batting our head back up against that. So we've started to inject some liquidity back into the system. This is the M2 Global Liquidity Index. As that liquidity comes back into the system, it has to find a home. Is that home Bitcoin? We shall see. Okay. So that's where the liquidity stands right now. If we take a look at the kind of the bigger picture, here's this big cluster of volume that I said we dropped down to. And if we back out a little bit, you can see it right there. Big cluster of volume. We dropped down into here. We did not want to drop below this true mean because it would have gone into this gap right here. And this gap has a lot of space all the way down to about $70,000. That's just where we raced through it so quickly back after the election 2 years ago. That, can't believe that was 2 years ago. Weird saying that. But that election that was back in 2024, we raced through this zone so quickly that not a lot of tokens exchanged hands there. Now, you can go over here to the 4 hour. And on the 4 hour, things get a little bit more, we can get more granular with things, right? So let's let this VRVP fill in and you can see what I'm talking about. We are in the midst of all of this volume. We are pretty much at where the point of control is on VRVP, or where the most number of tokens have exchanged hands over the last year and a half or so. And that's right here at around $96,000, $97,000. So here's the line in the sand, 95,000. Here's 96, 97. That's what we're beating our heads up against. Is this right now? We need to get above that level and stay above it for us to continue this move upwards. Otherwise, I feel that we find ourselves dropping back down, likely to this $87,000, $88,000 level. Why to there first? There's just a huge cluster of volume there. We also have our 50-day moving average right down here at 89. So somewhere in that range. Now, what you'll note is we are very, very mean reverted to the upside. That is, what is that number right there? 2.45 standard deviations, 2.49 standard deviations to the upside. RSI hit 74 on the 4 hour chart. It's rare for it to get that high. In other instances where we've been this high, we have sold off hard afterwards. When we've been this high, we have sold off hard afterwards. We're that high again. Do we sell off? My belief, we tap this level where we are right now, and we come back and we retest this area to really make it support. Notice it's been resistance. If you look back here, guys, you can see what I'm talking about. We've just been finding a home in that range that I just circled. Every time we get up here, we mean revert back down again. Do we do it one more time and then take off? That wouldn't surprise me. Maybe not dropping quite as far, but dropping to the top of that range, maybe only to here and then taking off. But I do see that as the possibilities moving forward right now with Bitcoin. So resistance to the top side, 94, 95,000. Support to the downside, $87,000 to $89,000. If we look at the Solana Bitcoin pairing, again, it's been pretty much flat, although Solana is starting to rebound just a little bit. You can see where we've turned up, right? We've started to turn up right now. All of this is a signal to go from Solana to Bitcoin. When we are mean reverted to the downside on a SOLBTC chart, that is time to go from from Bitcoin to Solana, Bitcoin to Solana. We want to buy Solana with Bitcoin because these are buying signals. On the other hand, if this continues back up again, like it did back here, that's a sell signal. That is sell Solana for Bitcoin, right? And I believe we're going to play around in this range, probably not even all the way up to the big part of the range, but stay in this range because you have your 200-day moving average right here. You have your 50-day starting to turn up here. You have your 100-day that will hopefully start to turn up. I know hope's not a strategy. So somewhere around this 0.016 level, that's going to be our next area of resistance as we're coming back up again. Support's been this 0.0014 that I've been talking about. I'm sick of talking about it. We need to get back up to 0.002. Solana on the daily chart, great, like perfect trend reversal right here at the beginning of the year. It's crazy. It's on January 1st that the trend went from orange. We've been in an orange dominated trend broken by one little blip here and an almost blip there. Otherwise, we've been in a downward trend since the 18th of September. Actually, the trend flipped on the 22nd of September. And if you want to say the longest continuous downtrend, it's been since the 28th of October, where we didn't even see any blue again after this point right here. But we have started to see blue. We are making our way out of this linear regression channel. It's a tight channel, 92 on the Pearson coefficient. That means it's super tight. It's been in a very tight range, and it's starting to break out of that range, which is great to see. We're just slightly mean reverted to the upside. RSI is starting to make its way back and climb back up into the positive ranges. Where are we going to see as resistance? My guess is the 100-day moving average, which is sitting here at 159, the 200-day, which is at 173. Those are going to be the first two areas of resistance to the upside once we break out of about 145. Why that? Because we've got to get through this volume cluster that we see right over here. So we got to get through 145. Then the next step is 159, then 173-ish. Support to the downside is pretty much what we've been bouncing along on, which is 115 to 120. That's been support to the downside. If we take a look on the 4-hour chart, it's going to look very similar. Let me back out and give us a little bit more of a history here, and we can see the volume profile really start to build in. This is the end of that giant volume cluster that I was talking about. Then we make a quick pick stop here at 159 because of the 100-day moving average. Really, the next significant resistance is 173 once we break this 150, 152 or so to the upside. But you'll notice that we are considerably mean reverted to the upside, coming off of one of the highest standard deviation readings that we've had in a while, 2.33. It's mean reverted to the upside. Also, the RSI was up here at 75. What I'm seeing a little bit of, and I would say raises a little bit of concern, since here the price is still going up, the strength of the move is going down. That's not a classic perfect bearish divergence, but it's good enough for me to keep my eye on it. That's what's called a bearish divergence. Price continues upwards, strength of the move continues downwards. Although this is mediocrely, if that's a word, continuing downwards. What do I mean by that? Just barely, right? You hit 76, 73. The next one hit 72. Next one over here, 71 and change. So it is starting to lose strength. This move is starting to lose strength at the same time as the price continuing upwards and to the right. So that's a bearish divergence. We'll see how that plays out. MicroStrategy on the daily chart. Is it about to turn finally? We got faked out back here, guys. We got faked out back in October, right around 350, and we went up, hit 350, and went straight back down again. Is the trend going to convincingly flip on the daily chart? I mean, guys, with the mNAV down around 0.82, depending on how you calculate it, the spreadsheet that I use that I've made for myself and the mNAV calculator on the G tracker, they're saying right around 0.82 right now, if you want to be exact, okay? But whether we're talking 0.8 or 0.9, it's trading at a 10 to 20% discount to the Bitcoin held on their balance sheet. And not only do they just hold Bitcoin on their balance sheet, guys, they're also holding over $2.2 billion in cash on their balance sheet now too, which the market isn't taking into account. It's crazy how it's trading so much lower than the net asset value of the cash and Bitcoin that's on their balance sheet now. I mean, the cash makes up almost 5% of what the Bitcoin is going for on their balance sheet now. So you've really got to take that into account. It's starting to become substantial. The mNAV is starting to turn up. So I'm excited for what looks to be a turn on Bitcoin. It looks like a double bottom here at around 150 and is now starting to make its way back up again. We'll see. Is it short-lived like everything else? It could very well be. It is encouraging, though, that if you've purchased a little bit of MicroStrategy lately, that it has started to turn up. I've heard that a lot of the shorts have closed their shorts, guys like Chanos and others that just drove it into the dirt. The thing that's looming on the horizon is 9 days from now, MSCI will be making their decision as far as whether to add things like MicroStrategy to their funds or not. And I've heard that it's priced in. I've heard that it's not priced in. I personally think it is. I don't think it's a big deal. I think it's kind of more of a nothing burger. Why? Because I believe that this treasury company is different than all the other ones that are out there. They have more tools at their disposal. And the biggest one are those preferreds that now have a cash treasury to back them up for the next almost 3 years. I think it's like 31 months to be exact. I rounded it up in a recent video. I apologize if I was off by 5 months. But about 30 to 31 months worth of coverage on the cash balance for those dividends. So it's not like they don't have the money to pay the dividends. They don't have to sell any Bitcoin for the next 3 years. And by then, what's Bitcoin's price going to be? Probably sky high. And so what is Strategy's price going to be? Probably sky high. That's why I believe in it over the long haul. What do we got to work through? We've got to work through this zone that we've been in, really 200. We got to get up above 175 to 200 and stay above it. Once we get above that, I think we start skyrocketing and start making our way back through these levels pretty quickly. Why? Because we dropped down through them pretty quickly. There wasn't a lot of volume at each level. It's not like people were catching a falling knife. Many people just let the knife fall, waited for it to bottom, and then started buying back in again. And I think a lot of that is institutional as well. Tesla had this pump, hit a new all-time high, and then turned around and flipped right back over again. Not surprising at all, guys. Remember, we talked about a bearish divergence here as well. I think I drew it out on one of the other charts, but I'll just draw it for you really quick. This is still going up. This high, the second one over here, is higher than the first one. This is going down. This is going down. That's a bearish divergence. That means that the price is still climbing up. It's trickling upwards while the strength of the move is going downwards. Okay, that's a bearish divergence. So the sell-off is not unusual. Also, the fourth quarter numbers are going to be kind of weak. I know Tesla's not a car company. It's a AI company. I know that. You know that. Wall Street doesn't know that, guys. They only care about the next 3 months. What happened the last 3 months and what's going to happen in the next 3 months. They think in 6-month windows. That's it, period. I have friends that work on Wall Street. That's what they do. That's what the analysts, yes, analysts do on Wall Street. They're literally looking at, okay, what have you done for me lately? And what are you doing for me next week, next month, and over the next quarter? That's it. So it's not unusual that it's taking a breather right now. It came back and pulled back to the 50-day moving average, which last week we said would be the first line of defense. We said it could come back down into this 400 range, and it could even come all the way back down into here and retest the 200-day moving average. Do I think that's going to happen? Looking less and less likely every day that goes by. But it's a possibility that you have to leave out there. And I'm not YOLOing in at the top. I haven't added shares of Tesla unless it's been 440 or lower lately. 440 or lower. That's where I start to layer in. Layer in heavier at 420, layer in heavier at 400, and even heavier if we go below 400. When we dip down here to 380, that's the range that you might look at doing a leap. You might look at doing a synthetic long if you have the margin available to you. Not financial advice, friendly advice, okay? We have earnings coming up. Many times it dumps after earnings, but then again, it can pump. Here's a pump, right? Bad earnings, it's red back here in April, and yet it shot up afterwards. Here's a good earnings, a green one, and it trickled down afterwards. Here's a bad one, a red one. It initially went up and then dumped afterwards. So to say that it's going to go up or down based on the earnings is really a crapshoot, in my opinion, honestly, with Tesla. So that's what's going on the daily. If we go into the 4 hour and we get into a little bit more nitty gritty, here you can really see where it pulled back almost perfectly to the 50-day moving average. It did dip a little bit below that. That was a glorious little dip. If it comes down and pulls down to the 100-day moving average, that's now at 420. That's why I said 420 is not out of the realm. It's also a favorite number of Elon's, right? He talks about it all the time. We are starting to see some buying signals on the chart. We are mean reverted to the downside, a nice green mean reverted dot to the downside of minus 1.28 standard deviations. RSI just bottomed out below 30. It hit 28.52. And MACD crossed over right here. You can see the crossover right here on the yesterday on the 5th. So if you don't have any Tesla, why do I keep calling it MicroStrategy? If you don't have any, because I just talked about MicroStrategy. If you don't have any Tesla, you may want to start adding. That's why I said, are we below like that 440, 450 level? Yeah, trickle below it. If it drops back down to 440, you might consider adding a few shares. But would I YOLO in right there? No, because it could certainly go down even further. You have to remember, this was 340, 320, 340, 350 just a few months ago. Elon bought $1 billion worth of stock and it shot it up to 475, right? Him buying the stock. Nothing else really fundamentally changed with the stock at that time. Some of the predictions for the future got a little juicier, right? With robotaxi coming around the corner, Optimus bots maybe being produced this year in mass quantities, like 5,000, I've heard. By the end of 2026, it'll be working in factories, right? Robotaxi should be operational in many cities, and we might have FSD driving us around in our cars while we sleep. But until those are delivered, they're just plans. They're not done. It's not completed, okay? So that's the point. What would be the resistance right now to the upside? First resistance I see is like 475, 480, and then that magical psychological resistance at 500. There are many of us that have been selling covered calls in that 480 to 500 range and printing money as a result of it because we're not afraid that our shares are going to get called away because we know it's so mean reverted to the upside, it has nowhere to go but to pull back. Right? And pull back. So we've been renting out our shares, just like we rent out our houses, just like you rent out a car if you Turo your car to somebody else, right? Instead of letting it sit there doing nothing. I'm going to throw a quick news segment in because I've had people ask me, can you do this? Can you trade with some of the free indicators that are on TradingView? There are people that are saying they can't afford to spend for some of the paid indicators that are out there, some of the other tools that are out there. And I said, sure, you can replicate a lot of the same types of things. So here I have, for instance, I have the Bollinger Bands turned on. I've got VRVP. I've got a 50, 100, 200-day simple moving average, a linear regression channel. All of those are free. They're all free. They're all right there in TradingView. RSI and MACD also free. I've colored mine a little bit differently, right? I've changed the shading a little bit. But those are all easy tweaks to make, especially if you've taken the TradingView and technical analysis course that I offer. I spend over an hour talking about all the free indicators that are built into TradingView and technical analysis, TradingView, sorry, that are built into TradingView. So here you can see similar type signals that whenever the asset, in this case, it's Tesla, is going out of the Bollinger Bands. Notice it's riding the upper edge of the Bollinger Band right here. Here it went out of the Bollinger Bands. And whenever RSI is over 70, perfect places to sell covered calls or to sell your shares if you're happy with the return that you've made on Tesla. On the other hand, when it goes out the bottom of the Bollinger Bands and RSI is down here at 30, perfect place to buy back. Similarly, right here, we went out the bottom of the Bollinger Bands and RSI was below 30. Perfect place to buy. Here, we're riding the upper edge and going out the top of the Bollinger Bands. RSI is 70. Perfect place to sell or to sell a cover call. If you want to wait for confirmation, there's the confirmation when the MACD flips over. Same thing right here. If we go out of the top of the Bollinger Bands here, RSI is above 70, flips over right here. MACD flips over. So you can trade with the free built-in indicators that are built into TradingView. I did that for 25 years before finding other tools that are out there. I also wrote a script where it's a trend. So let me turn off the Bollinger Bands where you can see that the trend is flipping from green on the way up to orange on the way back down, green on the way up to orange on the way back down, green on the way up. So that mimics some of the other trend models that are out there in case people are interested in that. So I just am trying to show people that there are more ways than one to trade. And if money is an object, start with all the free tools that are out there at your disposal. You might as well. I used them for 23 years before switching to other tools. Here we are back on Nvidia on the daily. We are coming off of being slightly oversold, right? So we were mean reverted to the downside. RSI was slightly below 50, but we're right back at the mean. So that tells us that Nvidia is pretty much appropriately priced where it is right now. You'll notice if we look in the Confluence cloud, we are right between pretty much all the Confluence clouds. We're right dead center. Confluence clouds are starting to narrow again. That means there's probably going to be some volatility coming up soon. Every time they squeeze, there's typically a move one way or the other after they squeeze. You'll note that the last time they squeezed was right here. At the time, we were slowly trending downward, so we broke out to the downside. Then they started to squeeze again right here. And as they started to narrow again, we were in the middle of an upswing, so we broke out to the upside and the volatility increased again. Right now, it's starting to squeeze again, and we're just slowly starting to trickle downwards. If we were to break out right now, I would say we'd probably break out to the downside, but I don't think that's going to happen. I think that in this particular case, we're just going to sit here for just a little bit longer. Catalyst will probably be the earnings report coming up in about a month. If we look over here on the 4 hour, we just came off of overheated. So on the daily, I said we're coming off of being oversold, but on the 4 hour, we're coming off of being overbought, getting sell signals. Here's a sell signal right here. At a time when this was squeezing, notice on this 4 hour, we squeezed right here. This is what I mean by a squeeze. A squeeze of the cloud. At that time, the price was trickling upwards. So which direction did it break out? It broke out to the upside, and all of a sudden, the cloud widened again. Now, the cloud will likely start to close again. Why? Because we're just trading sideways where there's no volatility. If it just keeps doing one of these moves, the cloud trades like this. And it all depends on, is it trickling down as that's happening? Then it'll probably break out to the downside. Is it trickling up while that's happening? Then it'll probably break out to the upside. Again, those are just some classic like using Bollinger Bands and classic TradingView technical analysis type tricks. So right now support is the 50-day moving average. We're just skimming along on that, which is at 186.67 as we speak. We're starting to pull back down towards the mean. RSI is getting towards 50. We're appropriately priced per the models on Nvidia right now on the 4-hour as well. Come over to the daily on Palantir. On the daily on Palantir, you can see big mean reversion spike to the upside, big mean reversion spike to the upside. But you'll also note that this is starting to form a bearish divergence here as well. You'll note that the peaks on RSI, the peaks on mean reversion, whether you use mean reversion or use RSI, the peaks aren't as high, but the price was trickling up higher and higher. It is starting to look like maybe a little bit of an inverse head, or not an inverse, a regular head and shoulders. If that is the case, and just kind of starting to see that right here, if that's the case, if that's a head and shoulders with this being the head and these being the shoulders, then we may find ourselves back down at somewhere between 140 and 150 right here on Palantir. I don't put a lot of faith in that, but possibly. It depends on how earnings goes. But right now, this one's perfect for selling covered calls on. I mean, sell a covered call on the spike right here, on the red dot right here, red dot right there, red dot over here. It shows up a little bit better on the 4-hour. On the 4-hour, here are those areas. Big red mean reversion dot spike, pull back. Big red mean reversion spike, pull back. Same thing, RSI well over 70, pull back. Big red mean reversion spike, RSI over 70, pullback. Big red mean reversion spike, RSI up at 70, 80.44, pullback. Use the tools, guys. They're there for you. These are perfect to help you time the selling of covered calls, if that's what you're doing, and or the selling of puts. Maybe you're selling puts. Same thing to the downside. Big green mean reversion dots, RSI below 30. Perfect time to sell puts on Palantir. So you understand, sell the call, buy the call back, sell a put. Sell the call, buy the put back. Buy the call back, sell the put. Sell the call, buy the put back. Sell the put, buy the call back. Sell the call somewhere up here, buy the put back. Sell the put, wait for it to spike, buy the put back, sell the call. You can literally sit here and make bank on one asset, trading it back and forth. You just have to ask yourself, am I a trader or am I one that just wants to buy and hold something and live through the ups and the downs? All of a sudden, if you had 100 shares of Palantir up here, they're worth $22,000, and just a week or two later, they're worth $14,800. Call it $15,000. So you're down $7,000 in a couple of weeks had you done nothing but just sit there and hodl all the way up, all the way down, all the way up, all the way down, okay? But Palantir bottoming, showing buying signals on the chart. If you don't have a bag of Palantir, this may be a good place to take a position. If you believe we continue trading in a range, if you think that we're going to drop maybe down to the 200-day moving average, hold out to try to get a slightly lower price on it if you are indeed looking to pick up some Palantir. MicroStrategy Tesla pair. This one is finally starting to turn, guys. We've got blue. We had it before and got faked out, but we have blue. What that means is MicroStrategy going to outperform Tesla in the immediate term? And we are starting to show a red dot for the first time in ages. Last time we had one of those, it sold off afterwards, meaning MicroStrategy began to underperform Tesla. Tesla outperformed MicroStrategy. That's what caused it to go back down again. Right now, the reason it's going up is MicroStrategy is outperforming Tesla. Tesla's taking a breather, and MicroStrategy is starting to have life breathed back into it again. I am starting to look at this more on a daily, and what I'm starting to see on the daily is we look like we're about to flip for the first time since all the way back here in July. So if indeed, we almost did here as well, and then we turned back down again back at the beginning of October. That was when everybody got liquidated in their Bitcoin positions, crypto positions. But is this the turn that we've been looking for, coming off of being mean reverted to the downside more than we've been in years? Is this the turn that we're looking for? Will crypto have its day at the beginning of 2026 while Tesla takes a breather? Perhaps because of the delivery numbers not being where everybody expects them to be. Again, Wall Street. We all knew they were going to be down a little bit because they did away with the EV credits at the end of the year last year. So that's what I see going on. If you've made bank with your Tesla and you're holding all Tesla right now and you don't have any MicroStrategy and you've thought about adding MicroStrategy, might be a good time to do so, because you can get 3 MicroStrategy shares for every 1 Tesla share. Close to that, pretty close. Whereas back here, you could sell 1 MicroStrategy share and get 1.5 Tesla shares. So that happens again, and we even get back to a 1-to-1 parity. Imagine if you can take 1 Tesla share and get 3 MicroStrategies, then take 1 of those MicroStrategies and trade it back for a Tesla. You're back to square one again, except you have 2 shares of MicroStrategy that are now free and clear. So just ways to think about the pair right now. Same thing over here on the MicroStrategy IBIT pair. That one has just been pretty much straight down ever since July as well. It is not showing signs of starting to flip up. That's because the Bitcoin is at a discount on MicroStrategy's balance sheet. They've added more Bitcoin to their balance sheet, but the market isn't reflecting that in the Bitcoin or in the MicroStrategy share price. Hence why the mNAV keeps coming down. mNAV goes to 1. All of a sudden, this sucker turns up and it's going the other direction, right? mNAV is right now at 0.8. Let's say it goes to 1. We start to see this move. Is it hopium? No, it's going to happen eventually. They're going to have to recognize the fact that MicroStrategy is sitting on 60 some odd billion dollars worth of Bitcoin. And if Bitcoin goes up 50% in price, they're sitting on over $100 billion worth of Bitcoin. I can't imagine they're going to discount that all the way down to like a mNAV of 0.5. I can't imagine that happening. But that's what would happen if Bitcoin's price goes up 50% and MicroStrategy's price stood still, which wouldn't happen. But if it did, then the mNAV would drop to like 0.5, 0.5 something. So anyway, Gold is miraculous, as we've talked about. There it is, made the all-time high, pulled back, gave everybody an opportunity to grab some. There's a green dot. RSI was almost down here at 30, and boom, turned and flipped right back up again. So gold is actually more volatile right now than Bitcoin is for all intents and purposes. It's crazy, this shiny metal rock that's just been sitting around for ages. Would I trade it? I don't know. I'm not really a trader of it. I'm just more of a holder of it. You'll note that I don't include it in my portfolio reviews, those of you that are in the community. It's just, it's off grid. We'll leave it at that. STRC. STRC got right back up to par. Look at this, guys. We're sitting up right now at 99.98. Okay, 2 cents away from par, but I'm going to call that par value, which is freaking awesome. STRK also starting to make its way back up towards par value after dumping all the way down to 78. Why did these dump? People did not have the confidence in them to be able to pay the dividends, right? It's the second time that it's happened. It happened back here big time, and then it happened again right here. It's when the sentiment, the public sentiment, and the FUD monsters are out there trying to shake you out of these things and make you think they're not going to be able to pay the dividend. However, like I told you before, they have 31 months worth of dividend payments in cash. So for the next 31 months, or almost 3 years, 2.5 years, they can pay these dividends from the cash pile that they're holding on to and not ever touch the Bitcoin. And every time you buy these things, whenever they sell more of them through the ATM, that cash goes in and buys more Bitcoin, which lowers the mNAV of MicroStrategy and makes MicroStrategy common stock even more appealing, because people start to put the numbers together and go, wow, it's selling at a 20% discount to the Bitcoin that it's holding right now. And they're not even factoring in the almost $2.5 billion worth of cash that they're sitting on to pay the dividends on these suckers. So that's how these things work, guys. I am a firm believer in it. STRC is my money market. It's been my money market. I have CDs that are maturing over at one of the brokerage houses that I got back when the CD rates were up near 4.5%, 5%. Well, they're nowhere near that anymore because interest rates have come down. So as those CDs mature, they get pushed over and STRC gets bought up. And that's the place that I'm holding cash nowadays. HIMS, we had a HIMS challenge where we bought HIMS and then it immediately went down here, spiked. We sold a covered call on it somewhere in this range right here. Covered call ended up expiring worthless. Right now, we're coming off buy signals. I did flip 100 of my shares for 2 leaps instead. That way I can sell twice as many covered calls against them, and waiting for it to start to show me signals of when I should sell another covered call, which is when the red dots start showing up and or RSI gets up there near 70. That's what I'm waiting for. So for those of you that are in the community and part of the challenge, I'm just waiting for that to happen. And finally, GLW. I did a trade alert in my community right here and bought a leaps. Ended up selling a covered call right here, rolled it right there. I didn't show it, but once this pulled back, I rolled it back down to a 95 covered call, and the 95 covered call is still perfect. I think I've made like $4 or $5 a share off of those covered calls so far. My plan is to continue to roll this leaps. This leaps is out through 2028. So for the next 2 years, once a month to roll the calls and try to generate somewhere in the neighborhood of 2 to 5% per month. And in doing so, it'll more than pay for the leaps, so that by the end, the leaps that I'm holding, the long call that I'm holding, is free, and I'll have the money to be able to convert it into shares at that point. So again, just another thing that I shared within the community. All the details are in there, like a big, long, detailed post in there. So if you want more information on that, make sure you join the community. All right, guys, another banger today, right? So if you want to see more content like this, make sure you smash that like button. Make sure you subscribe to the channel so you see more of my videos and more videos like mine. I'm not the only one that makes TradingView and technical analysis videos on the internet. I know that, right? So you can take from all of us what you like best. Maybe there's things I do you don't like, and there's things that other people do that you do like. Perfect. Make sure you're following all of us so that way you can compare notes. Drop a comment below. What'd you like best? What would you like to see more of? I read and respond to every single content still while I'm still able to. Also, guys, the premiere phase of the community is here. It's here now. We have people joining the premiere phase. It's exclusively for the forward-thinking traders and enthusiasts who see the vision early and are ready to lock in the best ongoing rate. So basically the ones that are joining the movement that we've created at the ground floor. And that premier price of $125 a month means that you're saving $25 off the regular price of the community, and that's locked in for life while you're active. If you drop out and come back, price is probably going to be back to regular price by then, which is $150. This is all part of the launch of the new community. There are members-only videos, members-only trade alerts, and trade ideas. I create a lot of ideas, and it's not just like, hey, I did this. It's a long explanation of the how and the why and everything else behind it. You get the whole community chat access, all courses, all topics, live AMAs and trainings. Guys, I haven't done an Ask Me Anything shorter than 2 hours. 2 hours. Most of them have been a little bit over 2 hours. And I've already done, I think, 4 or 5 of them since the community started. And there'll be another one coming up soon. So if you want to make sure that you're on that live Ask Me Anything and the live trainings that I'm doing, the feedback I've gotten on those, people are like, that one training was worth the community for the entire year. That's how much value they're getting out of individual trainings. That's the feedback I'm getting. I hope it doesn't seem like bragging. It's just, that's feedback. That's them saying it, not me. You also get 25% off all of my courses. So if you are a community member and you want to brush up on your options knowledge, take the Understanding Options course and save $25. And what you spent for the Premier membership, that's about the dollar amount of savings that's on the course. So you're technically buying the course full price. You're in the community for free if you want to look at it that way. And then 50% off the G-Tracker Advanced app. That app, guys, you guys have seen me putting videos out using the app. We have all kinds of calculators in there, all kinds of ways to track your options trading. It's banger, guys. So make sure you go to gdinerocoaching.com/premier. Book a course over at gdinerocoaching.com. I teach a course on TradingView and technical analysis, as well as a course on understanding options. That's also where you can go to join the community. That's where you can go to see some of the free links that I have and everything else. That's all over at gdinerocoaching.com. And finally, guys, I'm G Dinero. I'm here to help you increase your financial literacy, to help put you and your family on that path to financial freedom. Thank you for an incredible 2025. Here's to making 2026 your best year yet. I'll help play a role in it, but you're the one that's going to have the best year yet. Take care.
Yo, G Dinero in the house. Charge up, let's go. G De Niro, culture of the trade, stacking that green. T at Tuesday, money Monday, living the dream. Options popping, Bitcoin rocking, Tesla on fleet. Join the community.